Hello, everybody. Thomas Moore here. Looking forward to the opportunity to talk to you about how to win 98% of the time using one of my favorite option strategies of all time, selling put options. If you're new to income-based options trading, you're probably still trying to get used to placing trades on a sell to open basis. Compared to simpler option strategies like buying calls, buying puts, or even writing covered calls, put selling is pretty different. If you haven't spent a lot of time with this strategy, you might struggle a little bit to understand the reasons and risks associated with put selling. That's what I want to talk about in this video. Because put selling requires a higher level of options trading authorization, it's almost automatically assumed that put selling is a risky strategy. You've probably even heard your broker or investing advisor tell you that put selling was a very aggressive investing strategy. That can be a true statement, but only if you're selling naked puts and you're not following the approach that I promote and that I follow in the Rebel Income System that I'm introducing to you right now. Now, here's the real reason why brokers and investment advisors want everybody, you included, to believe put selling is risky. Let's suppose that you sell a put option on a $50 stock with a $50 strike price. Selling a put option means that you're giving somebody else the right to sell the stock back to you at the option strike price, $50 in this case. By the time expiration day comes, let's suppose that the stock has dropped all the way down to $35, so $15 below that $50 strike price. You're going to be assigned the stock at this point, and you're going to buy the stock at $50 per share because the strike price is a price that you are contractually obligated to complete the trade at. That means that right out of the gate, you're down 15 bucks per share or 30%, not counting the premium you brought in when you opened the trade. Now, this is where your broker or your investment advisor is probably going to stop for a dramatic pause, going to wait to let that really sink in so that you can react emotionally to the idea of such a big drop. Then they follow up with something like, nobody wants to have to take that kind of loss. Well, this is a very dramatic picture. And the truth is that it absolutely does happen on occasion when put selling is part of your income generation strategy. Fortunately, for anybody who really pays attention and understands both the opportunity and the advantage that a put sale actually gives you that I'm outlining in this video, this truth also goes much further than advisors and brokers are willing to tell you about. It's even much bigger than the limited view I've given you to this point. And it's interesting that most investors stop right here. As soon as they hear that you're going to be down 30% right out of the gate, they don't want to hear more. But the picture is much bigger than this. And the fact is that the reason that they do stop here is because they're either too ignorant or they are unwilling to exercise the patience and diligence that a successful implementation of put selling requires. Let's expand the view of our example trade a little bit more. Let's suppose that before you placed your trade, you noticed the company had built a solid reservoir of cash as reflected by its free cash flow. You also noticed that earnings had been increasing on a consistent basis along with revenues, and that what debt the business carried was clearly contained by a low debt to equity ratio. On top of all this, the stock also, let's suppose, pays an annual dividend of 2%. Now, because the stock is at historical lows, let's say that you also notice that its price to book ratio is quite a bit lower than the average for its industry, even below its own historical averages. Given the fundamental strength of the stock's business, the likelihood that the stock's current poor price performance is mostly being driven by the simple buying and selling dynamics of the stock market in general, as opposed to any actual fundamental problems with the company itself, is pretty high. We have to remember that every stock experiences its own cycles between highs and lows. It's going to move between peaks and valleys. When you understand that those cycles are normal, you also begin to understand that a fundamentally strong company with a stock price at historical lows should really just be viewed as a solid growth opportunity in the long term, not as a risky investment. This additional information that I've given you in this case is what makes up the backbone of the Rebel Income trading system. It's the core of an approach to the stock market that is commonly known as value investing. And it's also the kind of picture that some of the most successful investors in the history of the market, like Warren Buffett, Benjamin Graham, and a host of others, have looked for as they built their own fortunes. I've built the Rebel Income method to use put selling as a conservative way to generate income by combining the techniques of put selling with the discipline and patience of value investing. It's a combination that has given me a way to generate real, useful, and above average income while at the same time managing risk in a practical long-term way. Now, stocks that are already trading at historical lows provide better odds of an increase in price than a stock that is already running at historical highs from a long-term upward trend. For put selling, that means that these stocks provide an excellent chance they'll stay above the strike price of the put option at expiration. So if the option does expire worthless, I get to keep all of the premium I brought in, and I can move on to the next trade. If the stock's fundamentals are still strong, I often find multiple opportunities for additional put sales on the same stock, so I can just keep placing the same trade over and over again. I also try to maximize the possibility that the option is going to expire worthless by selling put options that are at least 2, 3, or sometimes even 4 strike prices out of the money. Following this approach has historically provided excellent opportunities to reap an average return of about 2% on investment or more on a monthly basis. Now, I spend a lot of time screening the stock market for the stocks that I use for the trades I place and that I make available for people who want to follow the Rebel Income system based on the stock's fundamental strength to identify whether or not they also offer a clear value-based advantage. Selling a put option also provides a gateway to the second part of my income generation system, which is selling covered calls. Since I only sell puts on stocks I like and don't mind owning at the strike price that I sold, why not use the ownership that comes from a stock assignment to generate even more income from the stock while I can? Selling out of the money covered call options is a great way to keep generating income while simultaneously lowering my cost basis. It also makes it easy to set up a net profitable scenario if the stock closes above my call's strike price at expiration. Now, the plain and simple truth is that just because a stock is at historical lows and maybe it's stabilizing down around those lows, it's not a given that the stock is going to go up. There is, quite frankly, an equal chance the stock will continue to go down, will drop below the strike price that I've sold when I place these put selling trades. That's why another critical part of the Rebel Income system stipulates that the strike price I choose for a put sale is a price that I'm willing to buy the stock at. I sell puts with the clear understanding I may be forced to buy the stock at that strike price. If that price level doesn't represent a great value by my analysis, I won't sell a put option at all. I'll place the trade aside and go find a different one. Now, again, when we're talking about thinking about downside, seeing the stock drop even several dollars below my puts assignment price, that can be a very scary thing to deal with. But it doesn't scare me out of a trade. I've learned not to panic in those situations, primarily because of the fundamental strength I've built the system to screen for. In the case of these extreme drops, it really usually just means that I need to exercise a little more patience and be very cautious about selling calls against the stock. If the stock appears to be consolidating, stabilizing, or possibly even building some bullish momentum, I'll often simply hold on to the stock until it starts to move back up into the general price area where I was originally assigned, where I bought the stock at. If the stock is continuing in a clear downward trend, that may be okay too, because those may provide some opportunities to sell out of the money call options to keep lowering my cost basis, call out covered call trades that are very likely to expire worthless. So I can just keep lowering my cost basis within just a couple of weeks or less to expiration. Now, dealing with these stocks that have dropped significantly below my put option strike price really is what requires the most discipline and patience. And this is the hard part of the system for most people. It does require diligence to track the company's fundamental news and earnings information. I've learned that the only reason I should really exit a stock at a loss is when I can see a serious degradation in the fundamental strength that I identified at the beginning of the trade. The good news is that it really just isn't that common to see a well-run and effectively managed company suddenly stop being well-run and managed. Well, if you've gotten this far, you're probably saying, well, all of this sounds interesting, this is great, but why should we pay attention to Thomas More? I've been in the market either as a private investor, as an educator, or both for more than 25 years. I started out in the mutual fund and brokerage business, drinking the same Kool-Aid that you hear from every mutual fund company about being patient and taking a long-term view of your investments. Throughout the 1990s, all the way through the dot-com boom of the late 90s, I was fully invested in mutual funds and encouraging everybody I knew to do the same. When the dot-com boom went bust, I lost more than half of my retirement savings. And that forced me to reevaluate what I was doing to take care of my investments and keep my money working for me. I began doing a lot of studying and talking to a lot of people who were smarter than me about what they were doing with their money to put it to work for them. I began learning about the stock market in a lot more detail, about the options market, and doing a lot of detailed study about how to identify how much a stock should be worth. All of that together ultimately led me to the system that I now use with the Rebel Income System. I've been actively managing a portfolio using the Rebel Income System now for a little over 9 years, and you can see the results of that system here. Over that time, I've placed more than 800 trades with a success rate of almost 98%. By success rate, I mean that 98% of the trades that I have placed have been completed and closed with a net profitable result. Now you can see that the average gain when I win is about 2.5%. That may not sound like a whole lot, but when you consider that I've done that in 98% of the time on almost 800 successful trades, it becomes a lot easier to see how you can build real wealth over time using this method. There are losing trades, and I don't shy away from those. I've had about 12 losers over that nine-year period. The average loss on those losing trades is about 18%, but the overwhelming majority of winning trades compared to losing trades is what makes it easy to make up for the difference and then some of that average 18% loss when I lose. Compared to the S&P 500 over the same period, I've also been able to do a lot better. The S&P 500 has seen a very, very impressive run. Over the last 9 years, it's up almost 134%. My portfolio in the meantime has increased by a little over 177%. I hope you found this useful. If you are more interested in the things that I like to do with put selling and the Rebel Income System, subscribe to our channel and I'll keep the information flowing and teach you more about what we like to do and how we do it. Thanks for your time. I appreciate you watching. Hope to see you again soon.